create a session where so we are officially sort of starting the session, and the people who join in later will catch up, and we shall also be sharing the recordings. So, good morning to you. Welcome you all. As I was just mentioning before the recording started, some of you might be intrigued as to why such a subject where we are combining the career spans and dreams and the portfolio for an individual. It happened recently in the last 6 months with a client of mine who actually was a friend earlier and now a client. And as we all hear currently, there are layoffs, there are people who are shrinking their workforces due to automation or due to relocation, multiple reasons. But life goes on. So that's what is inspired this session, and we will go through this, and I hope you will find it useful. So I welcome you all, 6th of June, today also being a yoga day, International Yoga Day. I hope you all are also being active in towards your health. So brief about myself and our company. We are in business since last 8 years now. We cater to 250 plus families across 7 countries. Our vision is to be among the most trusted and preferred partners for your investment and wealth creation. Our mission is to be the premier provider of curated investment products and financial services, delivering exceptional results and building long-term trust with our clients. I'm joined by Anand Rathi Wealth. They have been in business for more than 12 years. They serve more than 10,000 families and a combined AUM of 82,000 crores. So this is a strong backing and one of the best research teams for mutual funds in India. Somewhere along the line, our values matched: integrity, transparency, trust, and peace of mind. Because nothing works without these four. We will quickly go through the session flow here. We will cover the objectives, look at the current scenarios, the key pointers and the problem areas. Interestingly, some very eye-opening survey details, outline the solution, our approach towards it, the secret in wealth creation and building a long-term portfolio, a sample, what are the next steps that you can take, and lastly, thanks to all of you. The prime objective is to have a life less of drama, which means peace of mind. Now, the moment you have the finances taken care of, that you have your corpus, which is growing better than the inflation, so that we are not constrained and we can maintain the same lifestyle, not just in the present time, but even in the retired life. The guiding objective should be sustainability of your portfolio, and we should be able to take the market conditions, the volatility, which are not in our control, without being worried about the future. At the same time, we can also ensure that we are extracting a regular monthly cash flow so that our liquidity positions are not constrained. Lastly, when we work with the clients, our objective is to find a comfort where the client is understanding what is the risk that we are taking, what are they comfortable with, so we reduce it. So the problem statement which I was faced with the gentleman whose story inspired me, he was given a sort of a notice for whatever reasons, and he invited me home to understand the scenario, where he is, what would happen in the future, and we were gauging the pros and cons. The meeting was attended by the family, his wife, his mother, his elder son, and we began analyzing the problem. One line statement which his father told us: the approach should be able to safeguard the lifestyle through liquidity, we should be able to protect the capital in the medium term and ensure that it grows sustainability over time. These are the simple guidelines which I was given. So while understanding the problem, the pros and cons, we took the cons because that is something which was right in front of them. A layoff scenario, a shortening span, and automation due to advancing technologies. Sometimes people do wish that we have a early retirement. At the same time, we have increasing life expectancy as well. So what are the pros that we are looking at? Today we have huge opportunities to upskill ourselves. The rise of the gig economy, wherein you are not dependent on somebody else providing you a return for your time. Like you're working somewhere and you get paid for your time spent. Today we have tools and avenues available to us to build and secure a financial freedom. So these are the ground on which we were building a solution for them. Because we work with data and we should not keep it aside, wish it away. ICICI Prudential did a survey in 2023. Over 85% of the people expect to retire by 55, but less than 66% of the people have screen sharing was off. With the screen sharing. So when we're working with data, we understand the current pain. Although 85%, that's a majority of people want to retire early, but not many are prepared for it. Over 35% of actively managed equity mutual funds underperform the benchmark, and this has been a growing trend over a 3-year, 10-year period. We'll come to it later because the gentleman who came to me was actively managing a portfolio of more than 35 different funds. So we had to go through the process of reviewing it, and we'll cover this later in the slide. What actually is the reason for the review? And the 5 is the outcome of a recent survey that we did. 87% of respondents are concerned about inflation. Are you one of them? 33% are not ready for an unexpected market condition or correction, which we are witnessing for the last 6 months. Are you one of them? Does it affect your portfolio? 38%, nearly more than a third of it, haven't objectively evaluated their investment portfolio. What is the risk on their portfolio? What is the performance of their portfolio? This is itself a bigger reason for a review. 81%, gladly, more than 4 out of 5 people have shared that we would be interested to know a method to safeguard the investment without losing the returns or paying any higher cost of fund management. When we talk about the cost, one is a cost that you would incur when you do your own investment. Second is the lost opportunity. And lastly, 20% of the portfolios are not aligned to any goals or milestones, and because there is an inflation risk which is not factored in, unfortunately. So when we outline the solution, and because we have a methodical approach, and because the careers shrink, needs do not, and dreams live longer than that. I would just want you to ponder on this simple image. We all have assets, right? Some we have it in financial form, some we have it in physical form, some we have it in demat form. Real estate, a house, a plot, shares, mutual funds, insurances. These are all assets. They are classified under equity, debt for the sake of simplicity. There is a great amount of diversification done. And believe me, when you touch upon the secret in the later slides, you'll realize how a wrong asset class deeply affects your return. And then there is a rebalance. And then there is a rebalance aimed towards specific needs of the client, where we understand the behavior and deploy the strategies based on the needs. Why do we need to review? Because life changes, life keeps on evolving, market conditions do change, regulators change. We need to assess the fund performance or underperformance. We need to have a realignment with the goals. There is a new member in the family, a new marriage, your goals change, a new child born, goals change. And we actively, when we review, we mitigate the new risk which come across. If you take a new loan, it could be a smaller loan for a car or for some other purpose. But if that is a liability on your own balance sheet, it needs to be mitigated. There are certain risks which you undertake. Those have to be transferred. The liabilities of your life and health has to be transferred in a systematic manner so that your wealth is unaffected in times of any risk or unwanted scenario. So why we were discussing this with the family, the objective was to build a portfolio that lasts beyond a job. Just the way his mother was knitting something, we came across and presented a simple 5-pillar approach of what we do and how we do. The 5 pillars which we rest on is liquidity, so that your day-to-day expenses are not constrained. We ensure that the portfolio grows. We also ensure that the risk is managed, and his father said the safety of capital and the sustainability, so that we can continue to ensure the fruits of the portfolio. Now, what are we proposing? Diversification, optimal risk-adjusted returns, so that you do not lose out on the opportunity. And we do dynamic rebalancing, which is based on the current market condition and our proven methods of rebalances. How we do that? We invest your capital, we try and optimize the returns, and we lower the risk. Which are the assets which are appreciating? Equity and mutual funds. Is the asset allocation done arbitrarily? No. There is a proper defined process towards it. And while doing so for the family, we address the needs for the retirement planning. We did the overall risk management for their portfolio. We proposed a solution which was tax friendly, protecting their wealth, preserving it, at the same time also achieving a financial goal. We'll come to the specific numbers just in a few slides from now. Now, when we talk about the secret, very few outside the field understand that the real secret is not in selecting the right fund, is not remain invested, buy it and forget it. No, that's not the way. Even Warren Buffett keeps on churning his portfolio, and by the time it's 2 years, he has churned 80% of it. This is actual data. This is not something which I'm making up, and it is well recorded. So the market timing, the selection of stocks have a weightage, but 2% and 5%. But asset allocation in the right market plays a 93% weightage in the performance of the portfolio. Now imagine on the right you have this image. How is the asset ownership in India? 51% is into property because it's very safe. People think there is safety into property, but property does not appreciate for the simple fact that you can see it based on the data over the last 10 years. And this data is maintained by RBI. It is called as a Residex. The National Housing Board maintains across all tier 1, tier 2 cities across India. And you can see the results for yourself. Second, the largest amount next after the property is into gold, which is good. Traditionally, Indians, we all like gold. We love gold. Then there is bank deposits, which is actually a very unfortunate situation because bulk of the bank deposits and real estate do not yield any returns. If you look at the percentage returns, yield from a property, the rental yield, after the taxes, you actually end up having 2% to a maximum of 2.5% per annum on the property value. Even a Government of India bond gives you 6.5 to 7% in the current times. So, I mean, why should somebody be parking their investments into a low yielding asset? Actually is a very behavioral issue. Second is provident fund, pension funds, cash, equity. The equity asset class, which actually has given a compounded return of 14 to 15% over the last 25 to 30 years, has a smaller allocation of just 5.8%. Now, can you see the difference? Any household which has investments more into real estate or bank deposits does actually a long-term harm because time passes anyway. Correct. We need to see that our investments have to grow with time. Now, because his father said, give me a case study where you actually have delivered. Now, the current regulatory constraints do not allow me to share the past returns, so we respect that. I can only give a scenario. What is going to be the scenario after 20 years? And you won't believe this image that I have shared on the right. What is your requirement? Now, this was one sheet which I had shared with him some times back, which actually prodded him to understand कि मैं 1 करोड़ बनाऊं या 2 करोड़ बनाऊं, कितना टाइम लगेगा, मेरा SIP कितना जाएगा. And he was already on the path to create a decent corpus. So what I presented them that over the last 20 years, how the data has worked on the way we approach. Suppose if somebody is providing 100 lakhs, which is a crore, and we withdraw a certain amount, which is equivalent to 0.5%, which is 50,000 per month. Over the next 20 years, you notice that we have taken out 2 crore 20 lakhs for their regular monthly liquidity requirements, for the day-to-day expenses. Despite withdrawing 2 crore 20 lakh, the value of the portfolio has grown to 201 lakhs, which is nearly double. And the payout after 20 years is not 50,000, but 1,51,000 because it has to adjust with the inflation. And in the process, our overall portfolio of mutual fund and a combined position on the structured product debt arbitrage has given a return of 11.1% compounded. These are actual figures, and our model portfolio does deliver an alpha consistently. We will be happy to showcase you the performances once you are on board. So what ideally is the next step? He invited me over a cup of coffee because he knows that I love coffee. What we delivered to them, a very comprehensive review, which includes a proprietary health card of your existing mutual fund investments, direct equity of stocks, whether it is a PMF, insurance policies, whatever. Any of your financial assets, we do a complete, comprehensive, unbiased review. And we submit a detailed review report to each of your mutual fund holdings and as I said, a unique proprietary health card. The way we have a blood report, we will have a report of your overall portfolio. We build and we realign your portfolio, ensuring that we can have immediate withdrawals or for the retirement after 2 years or 3 years. The objective is that we should have a long-term wealth creation plan in place. What we would need you to do is to have your CAM statement and mail it us at ifa.matani@gmail.com and put the subject as portfolio review, and we will get it done and submit the report. I'll be glad to connect with you on LinkedIn. You can scan this QR code, which is in blue, download our charter so that you can understand what we do, why we do, and how we do it. Because if you do not have the trust in the approach, you will not trust us with your money. Thank you, everyone. We focus on wealth coaching, ensuring that we are educating the client to the best possible way. Assessing and de-risking of your investment portfolios. The objective is to optimize return and reduce the risk. Curating and aligning the portfolio to your family's milestone by improving the asset allocation. We submit solutions which are tailored to your requirements, not what a simple scheme or an NFO is promising. And we also conduct sessions to mentor young professionals. I'll open up for any questions. You can put it in the chat or I'll be happy to address.
So one of the participant is asking one question where if he has some existing portfolio in mutual funds and in stocks, can you review that portfolio and can we realign to our uh, retirement planning, which we have just explained?
Yes, definitely. One has to study it comprehensively and align it with the goals that we have for the client. And yes, we can submit a comprehensive report based on the needs of the client.
And is there any charges for that?
Certainly. No, we don't charge anything for the review. And even when you have an account, when you're onboarded, there are no charges to any one of the clients. Zero charges. No asset management charges separately, no account maintenance charges. It's purely free. And you get access to the app as well.
So the retirement planning which we have, which will be a combination of which product?
Basically, we have a diversified set of mutual funds And we also combine it with a structured product, which is proprietary approach. Plus, based on the requirements, we have arbitrage funds to safeguard and ensure the liquidity in the initial 5 year, so that any untoward movement in the market keeps the portfolio undisturbed from the shocks.
There's one more question. Is there any flexibility available in this retirement plan, or if I want to come out any point of time, there's no lock-in, right? I can come out
100%,
any point of time.
100%,
Yeah.
100%. There is complete flexibility and control, and the units always stays in the account holder's account, demat account. So technically, yes, there is 100% liquidity and 100% transparency. With this, I believe we'll end the session here. People who have attended would also be getting the recordings, and those who could not attend will also be approached thereafter. I think I'd request the backend team to stop the recordings. I'll stop sharing